Hello people, let's revise Accounting Standard 29 now. Sir, Accounting Standard 29 talks only about three things: provision, contingent liability, contingent asset. That's it. Only these three are the scope of AS 29. When should we recognize provision? When should we disclose contingent liability? When should we disclose contingent asset? That's all is the scope of the standard. Now, but around this, there are some concepts that are built around. The first one is something called executory contract. Executory contract. So, executory contract means executory contracts are those contracts where neither parties in the contract have performed their obligation, or all the parties in the contract have performed their obligation to equal extent. So, I didn't understand. Sir, let us say Mr. XO has joined Reliance. Mr. X has joined Reliance. Or let's say salary of Mr. X is 25 lakh rupees per annum. Yearly salary is 25 lakh. But Mr. XO also is getting a joining bonus of 3 lakh. Because some companies do this. Because you are leaving one company and coming to another company. No? So some companies offer also something called what? Joining bonus, meaning if you join this company, you will get 3 lakh rupees. That's what Reliance is telling Mr. X. Now, Mr. XO and Reliance have agreed all these terms on what date? 31st March 2025. On 31st March, employment agreement is signed, but the joining date is 1st May. Agreement is signed when? 31st March, but joining date is 1 month later, that is on 1st May. Now, this is an executory contract. How? Sir, executory contract means who are the parties in the contract? X and Reliance. Executory contracts are those contracts where parties have not performed their obligation. They have not performed their obligation. What is Reliance? Think from joining bonus viewpoint and tell me what is Reliance ka obligation? What is Reliance company ka obligation? To pay joining bonus? What is X ka obligation? X will get to this joining bonus only when they join. Has X, we are on this date now. We are on 31st March. On 31st March, has X fulfilled their obligation? No, X will join 1 month later. Has Reliance fulfilled their obligation? Have they paid a joining bonus or not yet? Not yet. That also will happen after 1 month. That only is an executory contract. A contract where neither party have performed their obligation, or both the parties have performed their obligation to equal extent. Equal extent means Reliance also has signed, X also has signed. Like that. Such a contract we call it as executory contract. Sir, why do we need this, sir? Sir, if it is executory contract, AS 29 will not apply. For executory contracts, AS 29 does not apply. That's the reason we need to know. Again, not that very important from examination viewpoint as far as I am concerned. Next, people, whether you recognize provision or disclose contingent liability, to do these two, we check for one checkpoint or one key aspect called obligation. Whether you want to recognize provision or disclose contingent liability, we need something called what's a obligation. Only if obligation there means provision or contingent liability will come. Otherwise, both will not come. So, what is this obligation, sir? Sir, AS 29 defines obligating event. They say obligating events are those events where entity has no realistic alternative but to settle the obligation. That's the actual words, or in simple terms, we used to say in class, no escape scenario. No. If you have no escape scenario, we say we have what? Obligation. Like, let us say A Limited has filed a case against B Limited, demanding compensation of 40 lakh. Can B Limited escape from the legal proceedings, or B Limited has to go through the legal process? B Limited has to go through the legal process. If the judge passes a verdict or judgment that B, you have to pay 40 lakh, what B has to do? Compulsorily pay. Can B Limited escape from this legal proceedings, or B cannot escape? That means for B Limited, one situation is created. What situation is created? No escape situation is created. If no escape situation comes into picture, means we say B Limited has a obligation. Done, Aji? Done. Sir, this obligation are of two types. Legal obligation, constructive obligation. Legal obligation, constructive obligation. Legal obligations are those obligations which arise as part of contract or law. Something which comes due to contract or something which comes due to law is what we refer to as legal obligation. Like gratuity. Gratuity, we have Gratuity Act of 1872 or something. I don't know whether it's abolished now or still there, but anyways. You also don't know, I also don't know, Zindabad. Okay, so gratuity obligation is as per Gratuity Act. Can company escape or compulsory pay? Because that is coming out of what? That is coming out of what? Law. So such an obligation we call it as what? Legal obligation. Okay, Ji. An obligation which arises due to contract. Contract also, it's the same thing. Suppose A Limited has sold product to a customer under 2 years warranty. Under 2 years warranty. Now, if the product is defective, what should A Limited do? If the product is defective, if it is not working properly, what should A Limited do for the first 2 years? Either repair the product or replace the product. Can A Limited say, no, I will not do it? No, because A Limited has entered into a contract with the customer to give that warranty to honor those warranty terms. Such an obligation is also known as what's a legal obligation because it has come out of a contract. Yes, that is your legal obligation. Constructive obligation means they are those obligations which arise due to previous trade practices, customs, established public documents, etc. etc. Those obligations which arises due to trade practices, we refer to as constructive obligation. In fact, I used to give you this example, so I've written the same thing. Let us say, just an example, don't hold it against me. Let's say ArivuPro has a policy that whichever student gets a rank gets a cash reward of 50,000. Example. Okay. Now we have a policy. What policy? Whichever student gets a rank gets a cash reward of 15,000. We have not made any contract with you. We have not sent any message or email to you saying if you get a rank you will get 50,000. We have not entered into any contract. Alright? Nothing. But you checked with your senior. You know senior and you call them up and say, what about this? Is it true or are they politicians' dialogues? Senior said, no, even I thought I will not get, but they actually paid. What did your senior tell? Your senior who got a rank also got cash reward how much? 50,000. That's what your senior told. Now one idea is set in your head. In your head, what is that? Now an idea or one notion is there in your head. What is that? I get rank, I get 50,000. Correct or no? I get rank, I also get 50,000. That idea is set in your mind. Such an obligation we call it as constructive obligation. Have we made any contract or it's due to previous practices? If due to previous practices, if the other party may, if any obligation is established, that we call it as what? Constructive obligation. For AS 29 perspective, either we can have a legal obligation or we can have constructive obligation. Anyone is good enough. Either legal or constructive, anyone is good enough. Okay, Ji. This is the basic. Now let's dive into the main mudda or main funda called provision. Sir, when will you recognize provision? Sir, provision will be recognized. When I say recognition, you pass an entry. When I say disclose, you only show it in notes to accounts, no entry. For provision, we do a recognition, meaning we pass entry. Provision will be recognized in the books provided 4 conditions are satisfied. All the 4. Present obligation arising out of past event which results in probable outflow of economic resources and reliable estimate of the outflow can be made. The day all the 4 conditions are satisfied, that day you will go and recognize a provision. Sir, what is the meaning of provision, sir? Provision is also liability. Provision is also liability. Creditor is also liability. Sir, what is the difference, sir? Creditor is pakka liability. Creditor is pakka liability, meaning how much you have to pay the creditor, when you have to pay the creditor, any confusion or full clarity? Full clarity. Provision, no clarity. That's all. Provision is also a liability, but how much you will settle, when you will settle is not 100% known. Like here, when somebody files a case against you, they are asking how much? Will you pay 40 only? Maybe more, maybe less. When you will pay? After 1 month, after 1 year, after 10 years, or when? Depends on judgment. Will we know how, when the judgment will come? No. So provision is a liability, but with uncertain timing and amount. When it will come, to what extent it will come, we can only estimate. We cannot say with 100% precision. That's all. Okay, that's the meaning. But to show the provision, we look for 4 criteria. I said, what are the first 4 criteria? Present obligation. We'll go one by one, maybe. Let's take this example only. A Limited, or maybe this. A Limited has filed a legal case against B Limited demanding a compensation of 10 lakh. Okay. Now, people, who has filed a case against whom? A, on whom? B. Whenever a case is filed, we take the help of whom? Lawyer. Yes, no. Now, B Limited asked the lawyer, hey, macha, what's the scene? B Limited ka lawyer told, go in the. We have 70% chance of losing. A Limited they have some good evidence. There is a B Limited ka lawyer is saying there is a 70% chance that we will lose the case. That's the facts of the case. Okay. Now let's go back and test the provision ka definition. What's the first, to recognize provision, what is the first condition? Present obligation. Obligation means, now you know, what is that? No escape scenario. Can B escape or no escape? So is no escape scenario created for B Limited? Yes. That means, does B Limited have a present obligation? Yes. So first condition, satisfied. Second one, arising out of past events. Sir, we don't create provision for forward looking events or future events. We always make provision for past events. Now, A Limited has filed a case against B because A feels B Limited has misused their patent. It's a patent infringement case. A feels B has misutilized their patent. That is the reason A has filed a case against B. Has this misutilization about to happen or already happened? Already happened. So it is a future event or a past event? Past event. What does condition number 2 say? Past event. Failed or passed? In this example, failed or passed? Past. Third one. Probable outflow of economic resource. The word probable means more than 50%. The word probable means more than 50% chance of what? Outflow. There should be more than 50% chance of the money going out. What is our lawyer telling you? There is 70% chance that we will lose the case. Sir, when B Limited lose the case, they will get the money or pay the money? Pay the money. So what are the outflow ka chance for B Limited? Is it probable? Probable means what? More than 50%. Here is it more than 50%? Yes. That means third condition of probable outflow of economic resource also is satisfied. Economic resource means some asset. Usually that asset is cash. Okay. Resource means simply an asset. Because of provision ka settlement, an asset should go out. And that asset going out chance should be how much? More than 50%. That is what condition number 3 is saying. Failed or passed? Passed. Fourth one is reliable estimate of the outflow can be made. How much you're going to settle, you should be able to reliably estimate. Let's say we ask the lawyer, what do you think we should do? Lawyer told, 7 lakh you pay, we will settle. 7 lakh, probably judge will ask us to pay how much? 7 lakh. I mean, what is this 7 lakh? What is this 7 lakh? Reliable estimate of the outflow. So if all these conditions are satisfied, we will pass the journal entry for provision in our books. What journal entry? The journal entry for any provision is same. P&L account debit to provision. If it's provision for warranty, we will say P&L account debit to provision for warranty. If it is for damages, we will say P&L to provision for damages. If it is provision for DBO, P&L account debit to provision for DBO. What is DBO? Defined benefit obligation. We studied yesterday AS 15. Thank God. So this is about provision. Okay. Everyone clear? He came. I don't know what he was doing till now. Okay. Yeah. So provision over. Yeah, provision over. Next aspect, contingent liability. Sir, if I have to tell in one line, if the outflow ka chance is more than 50%, provision. Less than 50%, contingent liability. That we call it as possible obligation. For provision, it is what obligation? No, probable obligation, meaning more than 50% chance. For contingent liability, it is possible obligation. Possible obligation means 50% or lesser. Okay, see? Okay, Saru. Suppose in the same example, lawyer tells so we have only 45% chance of losing. We have only 45% chance of losing. Sir, when you lose the case, only money will go out, correct? How much chance of money going out is there? 45%. If it is 45% means it will be probable or it will be possible? Possible. For possible obligation, you will recognize provision or disclose. Disclose what? And contingent liability in notes to accounts. That's the distinction between. That's the distinction between provision and contingent liability. Provision, we pass the journal entry. Contingent liability, we only disclose in notes to accounts. The whole game is around percentage. Probable, possible. Probable, possible. For probable, provision. For possible, contingent liability. Okay, Saru? Or, one more is there. One more is there. I'm not telling you the definition in the interest of time. Another way of is probable obligation. What am I saying? Probable obligation. That means ideally what you have to create? Provision. Probable obligation for which provision is not recognized. Once again, probable obligation for which provision is not recognized. Why? Condition 3 and 4 not satisfied. Okay. Now let's take this example. Sir, continuing this. So, Vando, Rando, Muno. Lawyer told 90% chance of losing. 90% chance of losing. Sir, if there is 90% chance of losing, it is possible or probable? It is probable. So, contingent liability or provision? Provision. But lawyer also told, judge will say, no need to pay any money. No need to pay any money. You know, sometimes the judge will be very, very nice. No. First time offense, pardoned. First time you have committed a crime, so I am pardoning you. I am letting you go with the penalty or no penalty. That means what is it? Money is going out or no? Money is not going out. We are losing the case. And it is also what? Probable. But is money going out or no outflow of economic resources? If there is no outflow of economic resources, does it make sense to recognize provision or no provision? No provision. In that case, you will disclose it as contingent. Understood? This is one. Another one. 90% chance of losing. So what obligation? Probable. Money also will go out. Money also. No money or money goes out? Money goes out. How much money goes out? Don't know. How much money goes out? No idea. Why? Somebody filed a case against me saying I polluted a lake 25 years back. 25 years back, from my factory, some waste was released and water body has got polluted. How many years back? 25 years back. 25 years back record I have. That means I have no clue what I have done. If you ask me last 5 years, maybe I have data with me. I can prove it to you that I have not polluted the water body. 25 years, even I don't know. That means, can you reliably estimate the outflow or you cannot estimate? One of the condition for recognizing provision is the last one. What is the last one? You should be able to reliably estimate the outflow. If you are not able to reliably estimate the outflow, then you will book provision or disclose CL. Disclose CL as in contingent. That's what I've written here. These two. Move forward to the next one. Hanji. So provision over, contingent liability over. One more G. Contingent asset. Till now we were talking from the outflow side. Now we are talking from the inflow side. Till now we were talking from B limited perspective. Now we are talking from A limited perspective. Same example. A filed a legal case against B demanding how much compensation? 10 lakh for patent misuse. For B it is an outflow. For B it could be an outflow. For A it is a inflow. Yes. So if inflow ka chance is probable. If inflow ka chance is probable. What does probable means? More than 50% chance. If A limited ka lawyer tells, there is more than 50% chance of us winning the case, then A will record asset or disclose contingent asset. Disclose contingent asset. You will disclose contingent asset only if it is what, sir? Probable. There it was possible. From asset side it is probable. Okay, now that's it. This one I've summarized it for you for your quick reference. Sir, if it is virtually certain means more than 95% chance. If it is virtually certain, on the liability side you will book liability. If it is probable, first we will think from the liability side. If it is probable obligation, then recognize provision. If it is probable obligation means what? More than 50%. If it is possible obligation means 50% or lesser, 5 to 50% we say, 5 to 50%. That we call it as what? Possible. For possible obligation, what do we create? We account or we disclose? What? Contingent liability. If it is remote means less than 5%. Remote means less than 5%. If it's a remote obligation, ignore. Nothing to be done. Just ignore, like the way you are ignoring me now. Yeah, that same ditto. Okay, sir. This is on which side? Liability side. Now we are talking from the asset side. From the asset side, if the inflow is virtually certain, book an asset. If it is a probable inflow, then disclose contingent asset. If it is a possible inflow or a remote inflow, ignore. Next, how much, sir? One more, da? One more page of chart book, da. Onerous contract. Onerous contract means loss-making contract. Loss-making contract, we call it as onerous contract. Okay. This is not much tested at inter-level. Concept is there. Questions are not there. It comes usually in final. I think once or twice it has come in inter long back. So we will do it off. Onerous contract simply means what? Loss-making contract. Sir, whichever door you open, it is loss. Sir, what is that, sir? Let's take a small example. Sir, X Limited has made a contract with Y Limited that they will buy 1 lakh units of a particular product. At what price? 10 per unit. X will purchase 1 lakh goods at a price of 10 per unit. When will they buy? 1st May 2025. They have made the contract today. Let's say today is 1st March 2025. Okay. So we have made the contract today, that is 1st March. But when will we buy? Today or 2 months later? 2 months later. At what price? 10 rupees per unit. And X and Y have agreed that if X cancels the contract, you have to pay a penalty of 80,000. If you exit the contract, X has to pay how much penalty to Y? 80,000. This is what is mentioned in the contract. Done, G. Now, after this contract is entered, let's say contract was entered on 1st January 2025. 1st January 2025. Purchase will happen when? 1st May 2025. But on 1st March, recession happened. Country in a bad phase. When recession happens, bad things will start following up. No. Now, X Limited realized that X ka businesses, they buy the goods and they sell the goods. They don't manufacture. They buy and sell. Now, X feels on 1st March, due to recession, the selling price of these goods will only be 8 rupees per unit. The selling price will be how much? 8 rupees per unit. X is full crying. Why? Sir, X has made a contract to purchase it at what price? 10 rupees per unit X will purchase, but X will be able to sell it only for 8. X will purchase at 10 and sell it for 8 means it's a profitable contract or a loss? How much loss? 2 rupees per unit. How many units? 1 lakh. So what is the total expected loss? 2 lakhs. Clear? If the X Limited goes ahead with the contract, if they execute this contract, if they go ahead with this contract, X will incur how much loss? 2 lakh. If X Limited cancels the contract, how much loss will they pay? 80,000 exit penalty. Whichever door you open, it's loss. You go ahead with the contract, 2 lakh loss. You cancel the contract, 80,000 loss. So everywhere it is loss. That loss contracts only we call it as onerous contracts. Meaning is okay. Now, if you are the finance damager of this company, finance manager of this company, which door will you open? 2 lakh ka door or 80 ka door? 80 ka door. Sir, that depends on how the company has treated us. If they have treated well, 80 ka door. Otherwise, 2 lakh ka door. Generally, what anybody will do? They will suffer, they will take up the higher loss option or the lower loss? Lower loss. AS 29 also says the same thing. You make the provision at lower of these two. You make the provision for lower of these two. 2 lakh or 80, whichever is lower. Okay, that 2 lakh is what? What is that 2 lakh? That 2 lakh is nothing but what? Can I say excess cost? Because cost is greater than the benefit, right? So that 2 lakh is excess cost. In this 80,000 is exit penalty. Okay, so you will recognize the provision at excess cost or contract penalty, whichever is lower. That's all you'll have to do. Actual definition is it's okay. So understood now. Excess cost to exit penalty, whichever is lower. That's where you'll make the provision for what? Onerous contract. Anyway, they'll not ask you provision. They may give you numerical and ask you to solve. So this is good enough for solving. Why worry too much about definitions? Next, next is something called reimbursement. Reimbursement means what? On one hand, you are paying, on another hand, you are collecting back. That only we call it as reimbursement. Sir, in AS 29 context, what is reimbursement, sir? Let's take a small example, sir. Sir, P Limited, no. He manufactures something called raw materials. P will manufacture what? Raw material, which he will exclusively, they will exclusively sell it to Q Limited. All the raw material which P Limited has manufactured, they sell it to another entity called Q. And Q will use this raw material and manufacture finished goods. That's all. So basically, Q Limited will purchase all the raw material from P and convert it into finished goods. And the finished goods are sold to customer. Okay, Saru. Now, P and Q have made an arrangement. What arrangement? If by chance any customer comes out with any faulty product, if customer says any product is faulty, P and Q have agreed that 40% of the loss, who will suffer? P Limited. 40% of the loss will be taken up by whom? P Limited. Or rather, P will reimburse Q. How much money? 40%. Sir, why, sir? Sir, if it is a faulty product, raw material also can be a cause of it, no? If a product is faulty, raw material also can be cost. Who is supplying raw material? P Limited. Hence, P and Q have made this arrangement. If any customer files any compensation, what will P Limited do? 40% of that compensation, P will give it to Q. This is the arrangement. Are we okay with this? Now, one customer, no, he filed a case against Q Limited demanding how much compensation? 10 lakh. Okay, and the lawyer is saying 90% Goinda. 90% Goinda. Goinda means for Q Limited, it's a possible obligation here or a probable obligation. 90% chance of losing means it is what? Probable. That means what should Q Limited do? They have to recognize a provision. For how much amount? Let's say lawyer told you have to settle 10 lakh only. You have to settle 10 lakh only. So you'll make provision for what? We'll recognize provision for 10 lakh. Agreed? But is this the only aspect or there's one more? Now, Q Limited has to pay to the customer how much? Q has to pay to the customer 10 lakh because case is going on. But Q will keep quiet or collect some money back. How much money Q will collect from P Limited? 40%, which is how much? 4 lakh. That only we call it as what? Reimbursement. Meaning is okay. What AS 29 says is provision and reimbursement should be shown separately. Should not net it off. here Q, what they should do is they should recognize provision separately for 10 lakh and they have to show reimbursement asset separately for how much value? 10 lakh of 40%, which is how much? 4 lakh. Provision should be shown as a separate liability. Reimbursement should be shown as a separate asset. Why is it an asset? For Q, why is this 4 lakh an asset? Because they are paying it or getting it? Getting it. But to recognize an asset, there is a criteria. In the table I had put, what is that? Virtually certain. So Q Limited will recognize this reimbursement as a separate asset provided it is virtually certain. This reimbursement and provision should not be netted off. They should be shown separately in your balance sheet. That's all this is provision. Hanji. Okay, Ji? I think last concept. Yeah, it is last concept. Restructuring. Called something called restructuring. Restructuring, I think we have discussed. Restructuring means shutting down a particular product, shutting down a particular location, changing the management. All this we call it as restructuring. Now, when you do restructuring, right? Excuse me. So, should we make any provision for restructuring is the point which AS29 is trying to address. What AS29 says is, same drama. Sir, when you make a plan, right? Just because you have made a plan, immediately don't recognize restructuring provision. That plan should be pakka, meaning it should be approved. You remember termination benefits we discussed? It should be duly approved. So, same thing here also. Okay, you should make a detailed formal plan and that plan should be approved. It should be a pakka restructuring plan. Not today I'm saying restructuring, tomorrow I am cancelling. No, it should be a pakka restructuring plan. The plan should be approved. And what AS29 says, you should make provision for restructuring for committed cost of restructuring. For what? Committed cost of restructuring. All right, meaning, or maybe let's take a small example. Sir, let us say I am in CA practice. Currently, where I am? CA practice. Now, from CA practice, I am going to CA coaching. I think for me, it's other way around. Okay, no problem. Let's have written it to so I don't want to cancel the example. So, currently, I am doing what? CA practice. Now, I want to shut down this and open CA coaching. I thought I'll try coaching. Let's see if people are ready to listen to me. I don't know. Yeah. So, I thought I will try. Okay, now people, CA ka practice I am having already. I want to continue or close down? Close. Now, there are already certain employees. I will keep them or tata bye-bye? Tata bye-bye, because they may not hold good in my CA coaching business. So, I said all my employees, thank you for your service. Thank you for wonderful service. Okay. And then I paid some money to them. After all, they have worked with me for so many years. So, I said, take some compensation. Take some compensation. Sir, how much, sir? That is between me and them. Why are you bothered? Okay, now some compensation I am paying them. Okay, Saru. Yes. Now, that is one aspect. That is one cost. Now, I want to open what? CA coaching. Now, people, if I use a resource for CA practice, same thing, can I use it for CA coaching? Now, for laptop, usually for coaching classes, we need gaming laptops. High capacity, high graphic card, high processing speed wala devices, because it will crash otherwise. The class, what's going on? Please don't. So we have suffered this a lot. Okay, earlier we used to use gaming laptops. That also used to crash for the second batch. Morning it used to run properly. Beyond 5-6 hours, even that was also acting cranky. That's the reason we shifted to now desktop version of Apple. Because we need more and more processing speed, otherwise that load system will not be able to take. Okay. Now, coming back to this example. Sir, I have a normal laptop with me now, which I am using for what? CA practice. Can I use it for coaching or I have to buy new? I have to. Something came down. Okay. Now, sir, I have to buy new iPad, new laptop, blah, 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 blah. Yes. Now, I want to relocate. Currently, no, sir, I am practicing, let us say, in some tier 2 BHK. Yeah, I am practicing from my house. Let's say I am practicing from my house. Now, I decided that let's open CA coaching in Chennai. Let's open a CA coaching center in Chennai. That's my business. Okay. Now, people, to open this coaching center, I have to incur a lot of cost. What and all cost I've given here? laptop, iPad, and I have to relocate from my Bengaluru location. I have to shift it to Chennai. So that means I'll incur what? Relocation cost. That means I have two categories of cost here. One, my existing employees, I have to pay them some compensation. And for new business, I have to incur some cost. So now, for what I will make provision is the question. For what and all I need to make the provision. So restructuring means something which is associated with your existing business. Something which is associated with your existing business. Relating to my existing business, what cost has come? Can you tell me? Here there are two costs. This is one, this is one. Which cost is relating to my existing business? Employee compensation. That means I should make compensation only for this. This is coming due to what? A new business. New business related, you don't make any provision. When you buy the laptop, record that laptop when you buy it. Now only no need to pass any journal entry for it. Yes, no. Because this and all was allowed, no, then things would have been a little crazy. Let's say Tata Limited says so. I will buy 300 aircrafts in the next 5 years. Pass journal entry now only. Yes, no, everybody will start misusing. Correct or no? Hence, for this and all, you can't make a provision. Because, sir, provision is a tool to target your P&L. Because by making a provision, what is the journal entry for provision? P&L to provision. The moment you make provision, P&L will reduce. So we don't want people to misuse it. That's the reason we're saying anything which is relating to your existing one, make a provision. For this and all, sorry boss, don't make provision. Let it happen, then you record. That only we mean by make provision for committed cost of restructuring relating to what business? Existing business. So now, tell this now. Now, for relocation of staff, will you make any provision? No. For marketing, for my CA coaching, if I am doing any marketing, for that marketing cost, will I make any provision? No. For future investment like iPad or new laptops, provision or no provision? And one we already know, provision is already made for future event or past events. So for future operating losses and all, you should not make a provision. Let us say next, after 2 years, I'm thinking I will suffer a loss of 50 lakh. Or next year, I'm thinking I'll make a loss of 50 lakh. Can I make provision this year only? No, because it is what? Future. We make provision only for the past events, not for the future operating loss. So this is a concept. Okay, Saru. Let's take 1 or 2 questions. We have 5 minutes time. Okay, we will check. Sir, I think there's a question again in study material. At the end of current financial year, some data is given. No, we have some 20 loss to blah blah blah. Chuma, they've given some crazy thing here. Let's come into the main matter. We have totally how many cases going on? 20. In that first 5 cases, so there is a 100% chance of winning. If we win means any outflow or no outflow. Is there any provision ka drama or contingent liability drama or no drama? No drama. Yes, no, because we are 100% winning. Yes, when we win, somebody has filed a case against us. So there has to be an outflow. If there is a 100% chance of winning means, is there any outflow or no outflow? No outflow, they only give it. This is for how many cases? Out of 20, this is the outcome for 5 cases. Next, they are saying for the next 10 cases, we have a 60% probability of winning. 1 second. If there is a 60% probability of winning, how much chance of losing? Let's not use the word probability there. You may get confused with probable, possible. Okay. There is how much percentage chance of winning? 60%. So how much percentage chance of losing is there? 40%. So only when you lose the case, there will be an outflow. What is outflow ka chance? 40%. With 40%, is it a probable obligation or is it a possible obligation? So this is a case of possible obligation. For possible obligation, provision of contingent liability. Contingent liability. Yes, sir. Okay. Now they have given a breakup. There is a total 40% chance of losing. No, in that they are saying there is a 30% chance that we will lose and pay how much outflow? 120. There is a 10% chance that we will lose and pay how much outflow? When they give you multiple probabilities, just multiply. That's it. These two you multiply. How much? 12 3s are 36. So this will be 20. Okay, no. That means how much is it totally? 56,000. This is for how many case? This is for how many case? 1 case. How many we have? 10. So multiply by 10. How much? 5,60,000. So in respect of first 10 cases, we have to make a total contingent liability. How much? Or disclose contingent liability of 5,60,000. Clear? Just multiply that case ka loss amount multiplied by that case ka probability. As simple as that. Okay. Then we have 5 over, 10 over. So totally how many cases are covered? 15. But what is the total cases going on with us? 20. That means there is another 5 more. What about the remaining 5? For the remaining 5, there is a 50% chance of winning. That means there is a 50% chance of losing. Sir, probable means more than 50%. Probable means more than 50%. Is it more than 50%? The chance of losing is more than 50% or exactly 50%? So what it will become? Probable or still possible? Still possible obligation. So what is it? Provision or still CL? Still CL. Okay, sir. If you win the case, will there be any outflow? No. There is a 30% chance of losing. How much outflow? 1 lakh. Multiply. How much is this? 30,000. 20% chance does this. 21 2s are 42. So total is 72. Correct? 72,000 for how many cases? 5 cases. The 350, 360. 3,60,000 for these cases. So for the next 5 cases, totally you have to disclose contingent liability of 360. Add these two. That is the total contingent liability you need to disclose. Okay, this maybe I'll take up. Study material question. I think it has come 1 or 2 times in one or two attempts. May have seen this. I don't know which attempts exactly. Sir, we have given warranty for how many years? 2 years. Based on the past experience, company is following the policy for making provision for warranty on the invoice amount. On the sales amount, we are making provision. On the remaining balance warranty period, we check how much warranty period is remaining. Based on that, we make a provision. Now, if the warranty remaining is less than 1 year, if the warranty period remaining, if it is less than 1 year, how much percent provision will make? 3%. If the warranty period is more than 1 year, then how much provision we make? 2% provision. This is not warranty. Warranty period remaining. We have to check how much is remaining. Based on that, we will make the provision ka percentage. And provision is calculated on what? Invoice. Okay. That's all. It's a simple game. Just observe. Sir, what you have to do is for 2 years, 31st March 2012, 31st March 2013, for 2 years, you need to tell how much is the provision. Okay, let's look at this. First year is ending on what? 31st March 2012. Now, people, one sale you have made on 19th January. One sale you have made on 19th January. How much value? 40,000. For all the sales, how much warranty will you give? 2 years. So count, add 2 years from this. What date you will get? 18th January 2013. So warranty period will expire on 18th January 2013. Yes, sir. 2 years warranty. From the invoice date, you will give how much guarantee? 2 years. If from the invoice date, if I add 2 years, I am getting 18th January 2013. Till here, all of us are good. Sir, how will you make provision? How is this company making provision? Based on warranty or warranty period remaining? Warranty period remaining. Currently, our year has ended on what? 31st March 2012. Sir, from here, you count here. I don't want you to give me the exact count. I just need you to tell me whether it is less than 1 year, more than 1 year. From 31st March 2012 to 18th January 2013. If you count, it is roughly what? 10 months. Correct? I mean, this is what? This is what? Less than 1 year or more than 1 year? Less than 1 year. And what is company ka policy? If it is less than 1 year, how much provision they'll make? 3%. So calculate 40,000 ka 3%. How much is that? 1,200. So on this sale, they will make a provision of 1,200 for this particular year. This is for the year ended what? 31st March 2012. Agreed? Yes. Okay. One more sale has happened. What is that? One more sale. 29th January 2012. 29th January 2012. Will it fall within the current year? Yeah, current year is ending on 31st March 2012. 2 years before or 2 months before the current year ended, one more sale we made. How much sale? 25,000. On this also, how much warranty you will give? 2 years. So when will the warranty expire for this? 28th January 2014. 28th January 2014. Our current year has ended on 31st March 2012. From here you count here. How many years? Less than 1 year or more than 1 year? Less than 1 or more than 1? More than 1. Sir, if it is more than 1, how much provision you will make? If it is more than 1, you make a provision at 2%. So 25,000 ka 2%. 25 twos are 50. Yeah. So this will be 500. Correct? Huh? Yes, G. Now next sale you made on 15th October 2012. Is 15th October 2012 a sale made in the current year or next year? Current year has ended on March, but this sale is made in October 2012. So should we make any provision for this in the current year or not required? So how much provision is required in the current year? Adding these to 1,700. That is the answer. For first year, you will recognize a provision of 1,700. Okay, Naji? Yes, sir, Ji. Now they ask for 1 year or 1 more year. Next year they are asking. What is the next year ka? Year ended. Next year is ending on 31st March 2013. Okay. Now people, how many sales are there? 3 sales. First sales ka warranty has expired what date? 18th January. And we are on what date? 31st March. That means this sale ka warranty period remaining or it is expired. After warranty has expired, any obligation for us or obligation gone? Any provision required or zero? On the first sale, no provision required because warranty has expired. Easy. Now, on the second sale you made, warranty will expire on what day? 28th January 2014. Now my year is ending on 31st March 2013. From here you count here. Less than 1 year, more than 1 year. From here, if you count here, the period is less than 1 year. For less than 1 year sales, what is this company ka policy? They make a provision at 3%. 25 3s are 70, so 750 or 7,500. 750, correct? Yes, sir. Next, on the third sale you made on 15th October. Now, on this also you give how much warranty? 2 years. So count, if you add 2 years warranty period, when the warranty will expire? 14th October 2014. This sale ka warranty will expire on 14th October 2014. Current year is ending on 31st March 2013 and warranty will go up to October 2014. Less than 1 year or more than 1 year? More than 1 year. How much sale? 90,000. Less than 1 year or more than 1 year? For more than 1 year, how much provision we make? 2%. 9 2s are 18. So this is 1,800. So we need to make a provision of 1,800. So what is the total provision required for second year? 2,550. Sir, we already made provision last year. How much? 1,750. Sir, when you make a provision, the journal entry, what you will pass? P&L to provision 1,700. You passed it in the last year. Last year ka closing balance will become current year ka opening balance. So how much provision we already have? 1,700. But for second year ended, how much we need? 2,550. We already have 1,700, but we need totally 2,550. So what you have to do? Provision you'll have to increase or reduce or what? Reduce or from 1,700 you have to bring it to 2,550. So you have to increase by how much? 850. For this 850, you will pass the journal entry in the second year. P&L account debit to provision for warranty order. First year you will pass entry for this amount. Second year you will pass the journal entry for 850. That is what they've asked in the question here. Okay, first year how much amount? Second year how much amount? Okay, Saru. Alright people, thank you for your time and patience. Bye bye.